Hello, my dear friends. Welcome to Kalpa Vriksha. In my channel, I have a playlist called Investing Ideas, uh, where I load videos like based on my experience and thinking that would help people like upcoming people who thinks of like trading or investing. So I have done a couple of videos. I have a very few videos because I created this channel very recently, 1st of Jan. So I would request you to have a look, and then if you feel these topics are interesting for you, then please go ahead and like watch them. So now today, I have like I want to talk to you about the CAGR. I think you might be knowing this concept by now, but like if you are not aware, this is one of the good information for you, right? Even if you know the things what I'm going to show you in Google Sheet, that may give you some more additional information which you like, which will be useful for you to do some calculation on your own, right? So now let's come directly into the Google Sheet. I would be taking you through these three sheets where in the first sheet I'm going to show you some dummy like for a decade 20 for like 10 years, like how it happened, and then I'm going to show you a real calculation by picking a stock, and then a small analysis for a decade. Decade, I mean to say 2020, 2012 to 2022. So this 10 years, based on CAGR, like we'll do some analysis. Before, let's get into the first thing, right? So imagine today in the sense in 2010, that is the like beginning of the year, like you invest 100 rupees in a stock, and that grows 10% every year. So 100 becomes 110 next year, and then this 110 becomes 121 in the next year. So like that, by the end of 10th year, you would have 236. So here, based on this 100 and 236 and number of years, we can straight away calculate the CAGR. This is a formula I have picked from Wikipedia. So the same formula I have like created as a formula in Google Sheet. Google Sheet and Excel, like they are like almost similar. So I use Excel a lot, and then migrated to Google Sheet because it saves all the information in the cloud. So there is no like like scare or like tension of losing our documents or files. So I'm not digging in detail. The same thing what you can see, right? So this formula I've just noted down as a formula. You can pause and you can note the formula. So 100 I've picked from here, which is the beginning value, and then so this 236 I picked here. Sorry, I should have made this background color. Okay, so 236 I picked from here, the after value, and then the 9 years. Why 9? Like why not 10? If you invest 100, it takes 1 year to become 110. So by 10th year, it would be total 9 years. You would be spending your amount. You would be sorry. You would be investing your amount. That's why we need to consider 9 years. Even you can see Tn minus T0. Okay, so 10 minus 1, which is 9. So if you calculate it, it it would becomes it would become 10%. Even if you see 20%, so this same formula would become the CHR would give you 20%. Okay, I hope this is very small example which gives you some clarity on CAGR. So let's see some real example, right? So if you know, Google Sheet has a formula called Google Finance, which is very, very useful for traders or investors. I use it heavily. Hopefully, other than CAGR information, this information may help you to gain something and you can use it for yourself. So let's see. Okay, what I did, right? So I have picked few stocks based on the highest market cap from like Nifty Auto, Nifty like Nifty Bank, from five different sectors. I picked the top stocks, and let's get their CAGR, right? So the first one is Tata Motors. Let me directly point to Tata Motors from this sheet. The moment I point it, so it would calculate automatically. It would give me the first price based on these two dates. Here I have noted down the start and end date. Start date is the 2012, the first Jan, and end date is 2022 uh, December 31st. So 181 would be the first price, and then this one we have to change manually, come down, and then 387. Okay, so now Tata Motors gave 8.78% return in this decade. This is 8.8% is a CAGR every year, right? The compounded value. So let's copy that and paste it here, paste as a value. Okay, and then let's get HDFC Bank. Let's quickly copy this and paste here. Let's see how we get. So this is a cool feature. Like it calculates dynamically and fetches value dynamically. So for the last value, okay. Oh, this has given a very good return, 25% CAGR. Values. Let's come to Reliance from energy sector. Let's wait for a few seconds. Let's pick the last value. Reliance is has given like 24%, 24.68, which is good. Every year, this value. So let's have two decimal so that we can differentiate a bit. Okay. So let's go to Hindustan Unilever from FMCG sector. Okay, let's see the last value. This has given 22%. Finally, let's see IT sector. TCS is the like top company in India based on the market cap. Let's see what values we get for TCS. And I'll take you through this formula like a bit later on. This is 20%, 0.92 to be precise. Okay, paste as a value. Okay, so if you just do small analysis, so yeah, almost all done well because like uh, more than 10-15% CAGR like for a decade is something very good. But even in those, right, like HDFC Bank, Reliance, and Hindustan Unilever, like these are the top three, and then followed by TCS. Tata Motors, this is 8.78% CAGR, like not that great compared to these five stocks. Let's come back to the real calculation sheet where I forgot to tell you this formula in detail, right? So this is the formula, Google Sheet, like Google Finance. This is something which gives more information, and you can like learn more from here. So here, right, like I have taken the first parameter is the stock price that has to be concatenated with the exchange. Like even you can pick from Nasdaq or any global market, and since we are looking for Indian market, so I select NSC. Even you can select as a BOM bomb for a BSc, but I like NSC because that is something I've just used to it. So NSC colon TCS is the first parameter, and then I need a price, right? The closing price for the day it gives that. So E6 is the start date, and F6, the fourth parameter, is the end date. So this has a 10 years gap. So what it does, it lists down all the closing price for that day. So if there's a holiday, then that will not be shown here. So maybe 1st of Jan might be holiday. Market might be closed on that day. That's why it's not showing. So other than that, like it will list down all the dates and all the closing price and gives you the full information. I have used this for CAGR, but right, you can use it for any other purpose if it helps you. So thanks for watching. I hope like I helped you a little bit. If you have any questions, you can put in a comment, or if you want to say something good, that's also welcome. So thanks. Please share it with somebody if he's interested. Thanks. Thank you.